Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 860th edition of Short-Term Trading Live with Oscar. Rock and roll, and let's get right into it. Traders, you are looking at the Russell, the daily bar chart. This video is for trading on Wednesday, April 25th, 2012. There it is, the Russell daily bar chart, the same chart I've been putting in front of you night after night in my videos. What I'm noticing here is that we got back into the flag. Look, this is the red flag right here. We got back into the bear flag after getting down here below it. Got back into it, and as of tonight, we are above the parallel channel. Very, very interesting that we are back above the parallel channel, back into the flag. Oh boy, what a difference a day can make. Thank goodness for the use of stops for you traders out there that might have been short for the entire day yesterday, because right at the close, or I should say right after the reopening on Tuesday afternoon, the markets exploded. Thank you to Apple News. So, what we have now is a market that is recovering very rapidly, and we are day traders. If it's bearish on Tuesday, then bullish on Wednesday. We as day traders are bearish on Tuesday, then bullish on Wednesday. We do not hold opinions. We do not stick to any opinions. We trade whatever the chart shows us tonight for tomorrow. The chart is showing us that you got to go buy the dips once again, right back into buy the dip mode. This is your Russell. If you want to look at technical indicators, they are turning and heading straight back up on the Russell as well. So indicators are bullish. The Russell itself suddenly becomes bullish after this rally and above this parallel channel. And I think you got to buy the dips. So that's our Russell chart, traders. Let's go look at the E-mini S&P. The E-mini S&P daily bar, just like the Russell, right back up into the bear flag, and now this should at least hit the average and then run up and try to test the top of the bear flag. So if it wants to still be bearish, it has room to get up here at least before coming back down. And then if it is what I've always been expecting all along, and what I've been professing to my omniacs, that what this bear flag really will turn out to be, in the end, history will record it as the right shoulder of a head and shoulders, which in fact is nothing more than a continuation pattern of the bull market. This is what I've been showing to my omniacs, or mentioning to them at the site, livewithoscar.com, and it's something that you should probably see for yourselves. Now, traders, futures trading, as we know, is extremely risky and can cause substantial financial loss. If you do not have risk capital to lose, if you do not place stops, if you do not understand this game, the futures arena is not suitable for all trading accounts. So be careful. But you're looking at what could very well be a continuation pattern, head and shoulders. Continuation pattern. The shoulder moves down. The head moves the line back up. Then we make the head, we come back down, and we make a right shoulder. If it's still a bull market, it's nothing more than a continuation pattern. For now, we'll have to say we're still in the bull market. As we know, the long-term bull market, we've been in this for quite some time. We've had a little bit of a pullback. I would expect that the pullback in the end will be nothing more than this head and shoulders. However, up close, what we're dealing with on a day-to-day basis has been the bear flag. The bear flag looks like the market looks like we are right back into the bear flag, and that should propel us at least to the top of the flag, giving us a couple of bullish days. Traders, if you recall the video I started out with this week, I drew an arrow on the board for you and specifically stated that I would not be surprised, and you should not either, if these markets flipped right back to bullish during this week before the week was over. We are through Tuesday, and it's already beginning to happen for Wednesday. Let's go look at more charts. Okay, traders, once again for trading on Wednesday, look at your Nasdaq. The Nasdaq hit right at the bottom of the channel on Monday Tuesday, it maintained the same low as it did on Monday, and then Tuesday night, it's all the way back up to here. That means for Wednesday's trading, it very likely will make it up to the average, giving us a bullish day at least for trading on Wednesday. Looking at technical indicators in your Nasdaq, once again, very bullish all the way down into the oversold territory, flipping to a buy posture. You got to love your technical indicators, and you got to love the fact that the Nasdaq is challenging and trying to head right back to the top of this channel. So there's your Nasdaq traders. Let's go pull another chart. Dow Jones Transportation Average. Traders, you might have recognized but that the last few videos I have done for you, I did not show you the Dow Jones Transportation Average. There's a reason. I've been looking at this as a bull flag all along, all throughout this down move that we've had. I have been viewing this as a bull flag and wondering if it's going to maintain the bull flag and take us higher. So far, the only test of that bull flag has been down here, and it held. And now we're testing the higher end of the bull flag. If you get above that, the bull flag will have proven to work, and we will take off in the transportation average. So very interesting how quickly the picture can shift from what looks bearish to suddenly bullish. What's making this whole thing flip back to bullish? Remember, traders, S&P looked as bearish as the day was long just 10, 12 hours ago. Then we had our closing Tuesday afternoon, and suddenly S&P and Nasdaq look much more bullish. What's causing it? Well, I think I can show you because it's right here in plain view for all of us to see. It is the 30-year T-bond market, traders. Remember, we've been looking at this chart and looking at this major resistance line for quite some time now, this one right here. And we talked about if you can get above and hold above, it's a blast off. If you get above and fail and come right back into it, then the bonds have topped and we will begin to break seriously. That's been the testing area. What it's done so far is on Monday, it got up above. On Tuesday, it turned around and came right back down below and has settled right here. So bonds are looking like they may want to come back down for Wednesday. And if that's the case, the E-mini S&P should take off. Traders, that is what I'm looking for. I believe that is what should happen. The bonds should back off. S&P should move higher for trading on Wednesday. If you like the analysis put forth in this video, come on down and join me. I'm not going to bite you. Come on down to livewithoscar.com. Jump into my free trading room and allow me to teach you how to view the charts and use the analysis to trade the markets going forward. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.